money. Sell trade there, made money. Yeah, buy trade there, made money. You see it? It's got to be a good size candle. You don't want a spinner candle because that doesn't give us any information. Sell trade, possible buy trade here. It's a bit of a spinner. Well, I've just said you don't take spinners, but it's a bit of a spinner on that one. Possible sell trade there, made money on that trade. Possible top edge sell trade there, made money on that trade. That's okay, that's okay, that's okay. Yeah, that's okay, that's okay, that's okay, that's okay. Possible sell trade there, that made money. Possible buy trade there. That made money. That's okay, that's okay. So far, that's what we've had, right? So can you see that in the last, how many trades have we just seen there? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 in a row winners. Scalping 12 in a row right there. Is that a reasonable outcome, guys? 12 in a row winners? I mean, I know it's not big change. I know it's not big winning candles. So there's a buy scalp in there. It's into the low price there, and you can see it's gone and made a very, very nice buy side profit. Do you see that? So if you bid some 31s there, you've just traded 40. 9 points. 9 points. And that's a buy program. So you've got to be very cautious about selling into a buy program because that's an aggressive, fast, high volume trade coming off the low. So when you see that candle, for example, there, you've got to be very cautious about just instantly selling into that. The next candle gives you the bigger opportunity to diverge because the prem is now diverging on that situation. And you can see that that's where you could have maybe taken advantage. Now you're not going to try and buy this because that's a very, very big prem again. You know, you're not going to buy into that. That looks like a sell program kicking off at that stage. So you just wait for the next divergence to creep in. And the next divergence, obviously, we're on these two red candles at the bottom edge here. That red candle there, and that red candle there. You starting to see them? You know, obviously you've got to be fast to be able to trade these types of trades, but nonetheless, all you're doing is taking literally a 5-second view of what's happening. And you've probably done about 20 winners in there, if you got filled on all of them. If you got filled on all of them. The chances are you're going to get filled on maybe about half of them. And, you know, they're kind of a little bit fast. As I said, for most people, you have to be literally ready to pounce on your charts. But the good thing is, if you've only got 15 minutes in a day, literally 15 minutes in a day to trade, you could have done 20 or 30 trades within the first few minutes, right? And if you can make $100 or $50 or $30 in each trade, you know, you could still potentially end up making, you know, somewhere in excess of maybe $1,000 in 15 minutes. Now you've done a lot of trades, you've never taken a long-term position, but you get the basic idea that you're able to take some of these trades and say, you know what, I'm bidding into this at the moment. I've seen a divergence. I want to buy into this the DAX and the Nasdaq, and sure enough, you've just had a big buy side winner right there. You see, it's just happened. Just had a nice buy side winner right there. The other thing you can do with this, of course, is you can trade it in the direction of value. So you could, for example, overlay the dollar against it so that you can see what's happening. So if you were to overlay the dollar, you could obviously look at it from that perspective, and you would only take trades perhaps in the direction of the dollar itself, so that you've got so there's your kind of ideas there. So some of the trades you wouldn't take if it was against the dollar, some you would. So you'd prefer to trade with it, you know, against where the dollar is, of course, and that would allow you to make a more educated decision about the overall bigger picture as well on the trade. Makes sense, guys? Makes a lot of sense. Now, some people say, but I don't like trading unless I've got a premium or a discount on the S&P itself. But that's tough because you don't always get premiums and discounts in the S&P. As I said, most of the algorithmic trading these days takes place on the S&P. So most of the premiums and discounts you get are in the index markets. Sell on gold's actually working out quite good. Sell side business in gold. You can see we've ran bracket measures. We've came off the bracket high there and we've managed to make bracket low targets. So if you're still short the gold with us, you should be bagging and tagging some of that lovely right at your target price there. So that's worked out rather nicely. Thank you very much. Sell side off the 62 halves, buy side off the 56 halves, and that's a $600 winner. Short gold off the uptick.